Welcome back to Ferocious Education. This is Ed. Today we're going to be talking at another stock that I'm in favor of, and one of those stocks that I do have already in my portfolio. Now, this company here I never talked actually about it, but if you haven't heard about AT&T, they are a telecommunication company, a bit more. Obviously, a lot of people in the US and Canada have heard about AT&T or has been at least exposed to some of its services at some point in their life. Now, it really also depends on how long you've been here and that kind of thing. But anyway, AT&T, they have different current products underneath them. So just to kind of understand this, so AT&T, their purpose is to create connections with each other and what people and businesses need to thrive every day with the stories and experiences that matter. So first off, they have three market focuses: broadband connectivity. We provide the high-speed fiber and 5G wireless broadband networks that connect people and businesses to create the foundation of how we live and work. And then you got software-based entertainment. They deliver compelling entertainment experience through HBO Max, and because the platform is software-based, they have an opportunity, or a sizable opportunity, to establish meaningful relationship with the majority of US holders or households. Now, premium content. We create and tell fantastic stories on our platform that drive customers' engagements and generate unique customer insights and create emotional attachments that can result in a long-lasting customer loyalty across our entire product set. So their operating segments. First is AT&T Communication. They provide more than 100 million customers in the US with communication and entertainment experiences across mobile and broadband. It has the best and most reliable 5G network. It also serves 3 million business customers, including nearly all of the Fortune 100, with high-speed, highly secure connectivity and smart solutions. 2020 revenues of around $110 billion. Now, you're able to see here for Mobility US, in 2020 revenues, it was around $72.6 billion, and Business Wireline was $25.1 billion for 2020 revenues, and Customer Wireline was $12.3 billion. So you get to see the slice of the pie there. Now, Warner Media. Warner Media is a leading media company and entertainment company that creates and distributes premium and popular contents from a diverse array of talented storytellers and journalists to global audiences. Warner Media Brands operates under one of the largest TV and film studio, delivers streaming videos on our HBO Max platform, and own a deep library of entertainments. Now, there are also popular digital sites such as Bleacher Report and growing family of streaming services, including Boomerang, DC Universe. Warner Media also offers a strong portfolio of advertising solutions in its Basics network, which sells advertising on its network and digital properties through Xandr, which provides marketers with advanced advertising solutions using valuable customer insights. 2020 revenue was around $30.4 billion. Now, AT&T Latin America. So that segment offers mobile services to consumers and businesses in Mexico. Now, the segments also include a minority stake in Sky Mexico. On November 15th, 2021, AT&T completed the sales of Referral video operation. The Mexico operation comprised of $2.6 billion of $5.7 billion total of the 2020 Latin America revenues. Now, diving a little bit to their latest kind of presentation to give you an overview. So, grow customer relationships. So, their most postpaid phones net adds more than in 10 years. Fiber share gains with sequential increase in net adds. HBO and HBO Max global subscribers are near 70 million. And they're effective and efficient in everything we do. So we increased the cost efficiencies, enabled revenues or reinvestments in growth, on track to achieve half of $6 billion cost saving by the end of 2021, and mobility EBITDA growth of 3.6%. Now, their shift to fiber driving consumer wireline, EBITDA growth, and deliberate capital allocation. So they announced the closing of $55 billion in asset monetization and generated $26 billion in free cash flow over the past 12 months. Now, they closed DirecTV transaction and Warner Media deal expected to close by mid-year 2022, and right capital structure in place to support future success. Now, from the last quarters, you're able to see growth in every sector. postpaid phone subscribers, AT&T fiber subscribers, and HBO Max subscribers. So some of their third quarter financial summaries. They reported a revenue of $39.9 billion, including 1 month of US video. Excluding US video, revenues were still up by 4.7%, up $1.7 billion. Their adjusted EBITDA is 14.5% year over year, with an adjusted EBITDA of 0.87 per share. Now their cash from operations is strong. It's $9.9 billion, with a capex of $4.7 billion and a gross capital investments of $5.7 billion. Currently, they have $5.2 billion of free cash flow, with a year-to-date dividend payout of around 63%. Now, this company does give dividends. It's not much, it's around 50 to 60 cents per share, but overall, you're still able to see that this company does hold very strong growth. In terms of price over sales and price over book, it's very close to 1 at each, so it's pretty much you buying at cost of the book and at cost of sales, which is something that is very rare to see for a company this massive. Now this company here has 7.1 billion shares with a market cap of around 170 or $173 billion. AT&T is a stock that I do like to keep in my portfolio just for the longer time. This company is quite massive, and it took a massive dump from 2020, around $40 all the way to half that price around $24, $22. So I do believe that this company is at least something interesting to keep in your portfolio to balance it out in telecommunications sector. Now, institutional buyers, of course, there's going to be a lot of them. This is a mega company. It's not a small cap, so there is a lot of interest for this stock. But before moving on towards technical analysis and discussing a little bit further, if you would like to see more contents like this, make sure to click the subscribe button and leave notifications on for this channel. Also, don't forget to drop a like to this video if you've enjoyed it, and you can join our Discord if you would like to do so. We're not going to dive so much in depth for technical analysis because this is more of a longer term play for me and for a lot of people rather than very much of a short term. So for that, we're just going to dive quickly more, let's say into a 1 week perspective. This company definitely has been on its own downtrend for a bit. And there is legislations that are affecting this one overall, but in terms of the stock itself, it's not high volatility, at least at this point. You're able to see that it did trade in a similar pattern and then recovered, but honestly at this point, it's a company that is driven by fundamentals and growth. But even though it really tanked from 2017, where it was $43, all the way down now to $24. Now for myself, I don't see this more of as an alarming rate. Part of that was dividends itself, and it did recover before when it dipped down to $27 and then jumped back to $40. And I do anticipate similar movements in the future. Now this stock is one to keep for me at retirement, and at least thing it can do is hold against inflation for the time being. Now TNT has, by the way, multiple different technologies that we haven't talked about, including as well internet cables. They own some internet cables across the sea or oceans, and that is something to me that is really interesting. But I do believe that this company does have somewhat of a good future. The dividends alone aren't really something to worry about in terms of decreasing. Usually, basically, if companies give more dividends, the stock price doesn't change as much. And you get to see they decrease their dividends, you might expect higher prices push from retail in the future and from industry. Current average price target is around 30.75. So around 27% upside. It has a hold rating, so 3 buy, 5 holds, and 1 sell. And even on the lower side, $26. That's 5% increase from where it is right now. The average is 30.75, a 24% increase, and $36 is currently almost 50% increase from where it is right now. So the stock definitely does see some volatility that went more. Oh, sorry, it doesn't see much volatility. It did see in the past, but honestly, at this point, it's more of a waiting game, and I'm preferably keeping the stock as one in telecommunication. Dividends are nice, but nothing significant that would make you buy it just for the dividends. What do you think about the ticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.